once again very much for having me here. So
Our
let's
pleasure, sir.
move on, friends. So what we're going to do is today also talk about you know something which many of you, or I think quite a few of you, may have obviously heard about, is algo or system trading. And we are going to try to understand that. For some of you already may know, it may be a little bit of recap, some things, maybe you get some perspectives from a dimension where I look at it. For some of you, it may be new. And we're going to talk about a strategy for trading in the index, right? So about that. So without spending much more time, let's delve into the system.
So friends, the title sponsor of our program is Espresso, the Sharekhan company. So it's a great pleasure to have them on board. More details in the end of the session. Thank you very much.
Fantastic. It's so great to see this lovely yellow and really bright, nice slide from
I
Espresso.
also like
Very
their
fresh.
slides. Everywhere yellow.
Absolutely. Um, so as Ashok has already given you a brief, I'm not going to go much into this again. Only thing to add is at Ravaniti, we run basically a portfolio of strategies also, very similar to what Ashok is running. We keep learning from each other and it's a constant journey. One of the things obviously I do like a lot is to travel and trek whenever I can. So first things first, before we start, okay, systematic trading involves, what do we basically do? Check past data to draw some idea or a model of years where many of us get misled. It's not about what is going to happen in the future, but what may happen. We are just trying to get up an idea about, if we try to do this, and we have done this in the past, what is likely to happen. So that is one. There are obviously no assured returns in kinds of systems or algorithms we show. I don't think any one of us is expressing that kind of thing. If I think somebody expresses that, you may want to be careful, do your due diligence. That's all I would like to say. In my 10, 11 years of working with systems and systematic traders, and number of them and hundreds of traders like Ashok, experienced and lucky to get to interact, I think I've seen many systems will go through phases where they'll work for a while, they may not work for a while, except you're doing some high frequency, too many systems like a casino with lots of large capital, hundreds of crores, where you're running all types and managing risk very well, which is very, very professional game. They kind of may possibly be positive over the month or weeks and things, but in the low to mid kind of frequency or things that we do, which we show, which is, and I'll talk a little more about low to mid, these are basically, we are trying to maximize our chance of making money, and there's no sort of like assured return kind of thing or something. So what one may want to do is allocate probably up to 20% of the liquid net worth that one has to systematic trading. Again, this number could differ. If you're kind of like got a already high net worth ultra, you could probably look at this number to be 10-15%. If you're probably still early and looking to build capital, maybe you may want to risk a little more. But basically, the lesser the portion of your total liquid net worth is to strategies like this, the more tolerant we are towards taking risk and sticking to the systems when run. Just what Ashok and we were talking about in the start, very similar to that. So these are some things. Now, once this is set, I hope the background is clear, the context is clear, and I'm going to get into now the model and the strategy. So the way we are going to do this is, I will talk about the strategy broadly, like in terms of few things to take care about the strategy, exact rules about it and all. We will get into it in the other half of my talk, where I'll take you through trading view in PineScript language. The system is built there. We'll run it there, and we'll analyze the results and the various metrics and performance of the strategy. Followed by after that, there'll be Q&A, and you can like reach out on the Q&A. Right? Okay, I missed this key, extremely key. I don't know how I missed it. So finally, it kind of boils down, according to us, to risk management, and especially wherever derivatives is involved, it's even more important to look at risk. Right? Whatever we do, whatever system we run, primarily we want to look at how we manage risk. Okay, so let's talk about momentum trading, right? What are we doing? So what is momentum? Going to some of you, if basically like you throw a ball, okay, ball will fall on ground, bounce back up, again fall, bounce back up little and slow, but it will bounce, right? So once that object has taken some sort of speed and direction, it may tend to continue in that, right? So similarly in stock market, prices may continue to trend. So what is our aim as traders? We are aiming to ride this trend, both bullish and bearish. It doesn't matter what direction the money is being made or the market is going. For a systematic trader, he or she is absolutely undisturbed, unruffled, unattached, and no commitment to direction. His or her commitment may want to be only with one aim, that is to basically make money. So we want to ride the trend, both bullish as well as bearish. There are opportunities which both markets provide. In fact, I think the only, biggest advantage of systematic trading, if we talk about it, is to being able to earn money even on the bearish side, right? Or even using combinations of options, we may tend to earn even in a sideways market. Whereas the equity gives us only one directional play. Obviously, it's a powerful direction. It's a long direction, which is what probably most of the time the market is doing over a period. It is either sideways to bullish, with mildly bullish or strongly bullish. But there are periods when market falls and even crashes sharply. Like some of you have seen crash of 2008, Nifty fell 50-55%. In crash of 2020, the COVID crash, Nifty fell about 38%, Banknifty fell 50%. And history of data across markets has shown that there are trends, especially Victor Sperandio, one trader, if you have heard of him or you Google him, trader Vic as he's called, he has talked a lot about primary trend, secondary trend, and intermediate trend, like intermediate trend and the current trend, right? So basically there are trends happening at monthly, weekly, daily, hourly, different levels. And technically, if you ask, there is nothing called the trend because it's all in different frames. So then you will say, why written the trend? Because I'm basically referring to like whatever time frame I show the system, whatever trend is there on that is the trend for me, right? So if I'm showing a hourly system now, then when I say the trend, I'm talking in respect of our 1 hour. So what are we going to do? This riding we are going to do in indices, Nifty and Banknifty. Right? These are the two indices that we are going to run this on. And to get our technical signals, we are going to basically, to get our signals, we will be using technical indicators. So only input in my system, only and only, is price, pure price. And we are going to use no fundamentals in this, okay, and purely take signals on the price of the candle. Okay. What we're going to be doing is using a very interesting concept of swing detection, swing highs and lows, which some of you may have heard and seen, and I've talked little about swing in the next slide. But we will be learning a method where we can detect a swing, upswing or downswing, where the method has been entirely, the kind of the whole method is proprietary, which I'll be sharing. I don't know if anyone else, see, it's possible that someone else may have thought of the same thing, but as far as, I mean, from my perspective, it's something that I've built, obviously, and whatever reference I've taken of some other studies of some other trader, I will quote that. And that also goes out to say that traders are always learning from each other. So many traders say, um, why should I kind of um, use something straight away from somebody, or is it okay, or is it not okay? Should I share? The point really is that when you build a system and you trade it, it's like your own baby. Okay, so end of the day, you will never have your father or a parent, you'll understand, or if you're a child, you go and ask your parent. You can only understand or trust or live with beyond your baby, right? Like kind of you, if it's somebody else's baby, you would basically abandon more or less, right? So till your system doesn't sort of become your baby, it's very difficult to stick to it when it goes into a drawdown or a losing phase, right? So whatever I'm sharing, you may see it, use it, learn from it, tweak it, adapt it, make it your own, right? Or use this learning from this to build, possibly it may help you in building your own system or your own method, right? These both aims we hope we can fulfill. So the book that I've referred to pick up this concept of swing is basically from Mark Riverland's book, Swing Trading. Mark Riverland is a UK-based trader, author, and I think his book on swing trading is probably one of the most popular books on swing trading. Right? So what is swing? Okay, so think about it. Swing is neither too short term, right? Like it's not like intraday, nor is it too long term. It's not like monthly, yearly, and something as well. So what is it? The answer is clear, right? Somewhere. For this system's perspective, ideally we are kind of looking at 2-3 day trends, at least like little above more than intraday. Some traders define swing also has 2 to 3 weeks kind of thing. Okay, but with the current markets, I think the way movements of markets have become more volatile or more fast at times due to more use of systematic trading and automated trading and high frequency trading and computerized robots, probably we can get, I think it's a sweet spot to get like capture 2-3 day kind of trend. Yes, some trades in the system may run a little longer, but mostly the sweet spot is to do like a shortest term kind of swing trading, right? Not the weekly to weekly kind of thing also, which some people define. So the definition is not very strict, but like from my perspective, so for our perspective for this presentation, we are going to stick to like sort of a 2-3 day kind of trend which we are like trying to capture. Now, what is the challenge of swing trading, right? So typically I faced this when I started in trading. Let me tell you a story. I started trading a system in 2012 with help of sort of one chartered market technician trader. He also had an idea about which he wanted to test, but he didn't have computing background and expertise. I had computing background and expertise, but I didn't know much about systems, technicals at that point. So I still am learning, but that time was very raw. So we started together and we made one system on 3-minute candle. Okay, using some moving average and Donchian channel. Donchian channel is the highest high, lowest low channel. And we did it intraday. Okay, so I used to close the trade at intraday. Now, what I realized after a while is that the transaction costs and slippages that I was incurring, there were days when I would make money, we would make money, yes, but like the many days when it's the broker only who's getting rich, the government is getting rich, and like we were not making any money. So we changed the system bit to make it positional, right? And that's where I kind of obviously found my mojo, I would say, in a way, because I was kind of doing short-term positional trading in my manual discretionary trading, but I was trying to convert and build a system which was intraday, largely because probably I was a bit fascinated with some intraday system traders, and I thought I will replicate them, try to make a lot of money like they were making. So it was a good idea, but also a bad idea, because I couldn't be that person, right? So I had to finally find what suits me and what I am, sort of. And I think that was a good transition, right? So I'm saying it's a constant journey, right? Like, we keep building systems, we keep innovating. Like Ashok was saying in the start, there's so much work that they're doing, and we keep talking about how can how should we approach this, and we are constantly trying to learn, tweak, make new strategy, innovate. So it's a journey, but at some point I think you may want to find some style that really suits you and reflects you. So in my opinion, if after we adjust for slippage and transaction cost, if you can make money, then this is perhaps the best style of trading, in my opinion, right? Because it's neither too short nor too long, right? And you kind of get a decent return when the market trends, right? But like when you're losing, you don't lose that much. We lose less. So it's like what ideally a business I would want in a business, right? When I lose, I don't lose much, but kind of when I'm making, I want to make fair, and sometimes even more for the risk that I take, right? So I mean, it's totally I think one of the best styles in my opinion of trading, right? And I kind of find it very nice. And many swing traders will tell you that those who trade profitably, there are many professionals, they would vouch. Again, like everyone tries to vouch and stick with their style, I think for me this is totally superb. So what we're going to do is we're going to basically, a lot of the other part of the session is actually practical. So thought to not use too many slides and things. I think that was an overview. We'll get into a system and we'll actually build it in TradingView and then analyze that, right? So is that okay, Ashok? I can move to TradingView?
Yes, sir, please.
Okay, sir. Thanks. So let's just do that. Right. So can you see my TradingView screen? Yeah. Okay.
Yes.
Fantastic. So this is TradingView, and couple of good things about it. It's, first of all, it runs in the browser. I mean, a lot of good trading systems now run in browser. But TradingView is extremely lightweight. I find it very lightweight. A lot of it is open source, so there are like a lot of free charting, free tools, and there are some pro features. So if you want to then go little pro, you pay a nominal sum. I think it's fairly totally, I think, worth it for the value that it gives, and then you kind of can harness the power of it. So this is the Nifty chart. Let me just put it on to Nifty future. So in futures, I just will choose the Nifty futures, and this is the hourly chart. In the bottom of the panel, like, you see these few multiple tabs like screener, notes, editor, tester, panel. We'll be going focusing on the editor and the tester, and let's actually do that. So what we're going to do is yeah, for that, let me just quickly talk about Pine Editor. So Pine Editor is nothing but the scripting language of TradingView. Scripting language is nothing but like writing a program or a script. Like, just think of some author or writer who's writing a story or a book, or some shooting of a movie, some author, right? A script writer, they are called, right? So this program that we write is also like a script of a strategy, right? It's the like a script similar to that, and different languages have different scripts. So Java will have a thing called JavaScript. AMI Broker is another system which has its own language called AFL, AMI Broker Formula Language. Similarly, PineScript is the language for trading, right? It's the language for trading. So we're going to open the script. Okay, so I have this. The beauty about it is because it is web-based, wherever I go, this is available. Like today, I had to be at a different place than where I usually am, in terms of like my computer machine. It doesn't matter. This is all on the web. Like wherever I am, the same script, the same code is available because of it being web-based and the cloud totally. So we'll open this code and let's delve into it. So I'll just zoom this for more clarity. Okay, I hope the font is reasonably visible and clear, and you can
Not
see
really, sir.
what is
So you
there.
need to make it slightly bigger.
Okay, sir. Just let's do that. Uh, I'm not so sure about how we do this in the Mac, but okay, I believe we may have to. I'll just kind of read out every line as I do it.
No
Is
problem.
that fine?
Yes, go
Okay.
ahead.
Okay. So what we do is basically this is like version 5, and yeah. So we are creating a new strategy called Nifty Banker. So where say the initial capital is 10 lakhs that we are giving, and we are going to be then getting into the rules, right? And before I do that, in the code, we actually kind of refer and say out the rules. So when we are basically going to go long, or that is going to buy, okay, what is the rule for that? What we want is the current closing price, whatever the close, should be greater than the previous candle high. Okay, so high one is nothing but referring to previous candle. So current closing price should be higher than previous candle high. And but the previous candle high, right, should be lower than the candle before that. So what it means, it will give like a U-shaped thing. It will give like a U-shaped thing, where just think of a 3-candle pattern. Middle candle has to, like if you're holding a cup, okay, something like a cup, say there's a stick in the bottom, that stick is the middle candle, okay, and the two ends of the cup, the top end and the left and the right end, are of candle 1 and candle 3, and the candle 2 is the cup in the middle, okay, cup ka stick, the stick of the cup, right? So basically the high of that middle stick, right, the high price has to be lower than the high of the left side of the cup, which is the previous candle's high, and the right candle, the rightmost, which is the current candle, that has to close greater than the high of the middle stick or the middle candle's cup, right? So it becomes like a U, becomes like a U shape. You can visualize it. That is the first condition for a swing, for an upswing. Very simple, okay, that way. So price was in downtrend, 2 candles forming where second was lower than the first high, it was a downtrend, and then current candle goes up, it turns sort of, so it's like a uptrend, it's a swing, okay, that's a bullish, potential bullish signal. And along with this, now there are some tweaks again. So to what I've done is, I think the problem or challenge with this kind of rule is, if we trade this each time we keep buying at this, there'll be a lot of trade, a lot of signal in and out. So we want to minimize that. So what we do is we add another moving average filter. So I'm going to be using this code only to kind of explain and give out the, explain. I think that's the best way for me to kind of show. And you pick out just like language, right? How we are talking. So what we are doing is here, upswing is okay, a 3-candle formation where the current bar close is higher than previous candle, okay, and previous candle higher than the previous candle high, and previous candle high is lower than the high of the candle before it, right? So this is upswing. However, there is basically a filter that we are going to add for taking bullish trade. So what is the filter? We use a 200 period moving average filter for taking bullish trades. So what we are doing now, basically on an hourly chart, if it's a 200 period, we are computing the 200 SMA, simple moving average. Okay. If I were to plot this on the chart, I'm sure many of you know, but let's just do it quickly. Okay. For some of you who may not be probably so aware, so I'll just use a moving average. Okay, and we will make this as the default you see is 9. We are going to make it 200. There you go. So I'll just shrink this a bit so that, just ignore this for now. Just ignore all this. We'll run that again. We'll also take away the volume and just make it clean. So can you see only the chart and the moving average line now? Right. So what this is showing, the current, you see the price is either below or above the average most of the time, right? Very rarely price will intersect, but price is either leading or lagging the average. Now what if I make this moving average as 1? Let's say 1. Okay, what is 1 average? It is nothing but all the closing prices joined together only. So if you see, the line is sort of, in that sense, it's overlapped with the price and disappeared. Let's start experimenting a little and just seeing the effect. Let's say if I make it a 5 period, just see how little lead, little lag has come. Okay, let me make it like 21. Okay, more lead lag, right? 50 will be even more. Okay, and finally, let's say if you do 200, lead lag is even more. Okay, so eventually either the price will meet the average, or the average will meet the price, sort of. And that's how this keeps happening and crisscross happening. If I just keep going into history, you'll see similar thing. In such periods, sometimes you see the crisscross is very evident, because price trying to go up, breaking average, again coming down, going below average, going up, going down, going up, but very narrow band, and it's just fluctuating and crisscrossing against the average. No clear trend at all, right? Then it breaks down and then it continues to fall, and the gap in, and now you can see sort of like a downtrend. Okay, so there are times where there's downtrend, then here it broke above the average and continued to rally up for a while. You can see the gap increasing, and you can see this probably uptrend. And now that uptrend has also sort of turned down for now, but it's not like it had gone below the average here on the second last candle on Friday, but closed, pulled back again the average. It is still like in the upper end of the average. So if we use a rule like a filter that when price is above the average, it is a bullish. Okay, so currently as per this rule, then price is in bullish zone. Even if it is 1 point above this blue line for the computer, as long as we have defined close greater than average, it will treat it as bullish. Okay. So in this current context, this is bullish.
Okay, Sarji, one quick
So
feedback from the participant. They're saying if you can change the background color
yeah,
to white, probably it will look much better.
okay.
I think left bottom somewhere it is there. Left bottom.
Yeah,
The view.
left. Um,
Ah,
the
wo
view
I
here
wala hai
is
na?
it
Yeah.
I wala? Yeah,
Somewhere there it is there. I remember doing that. Not that. Uh, Chalo, let me run trading view on my machine and let you know. You go ahead,
you
I will
can
let
also.
you know.
I'll go ahead and let me know. I usually just really prefer the black theme,
Yeah,
but
go
just let
ahead,
me
go ahead.
know. Thanks. And usually what I'm doing is actually I'm coding only and using. I very don't look at chart that often. So it's the chart is converted into the program. So
Correct.
unfortunately I'm not. Okay, so great. So basically, I'll just zoom so that you can see it more evidently. Yeah, probably that was why it was not so clear. I zoomed to show the effect. I hope that is now clear. So, uh, you see prices right now, like at a juncture of it is touching the sort of at the 200 SMA. Okay. Now let's just go back into the system. So okay, we go back to our Pine script. Okay. Now let us get into the exit rule. So this was the entry rule. We have two rules. First is we want an upswing. Okay. But along with that, the price has to close about 200 moving average filter. So the final long trade is when two conditions are met. I would say not two, but like both indicator conditions are met. Okay. We are in an upswing and the close has to be above the trend line. Trend line is nothing but the 200 SMA for us. It is like a trend line. Okay, we take long. Now, what is our long exit? That's one of the other, not other, I would say, most biggest advantage of a system. For me, at least, it was when I was trading manually, discretionarily. Many time I would take trade, and if it's going against me, I would not get out. It just happened. It has happened one current running trade I have. I take a call on one of the stock. Okay, and that stock doesn't do as per the direction I expect. It's going down, but this time I kind of get a little emotionally attached to that stock, and I feel no, I'm going to hold it. Obviously, it's a small portion of the discretionary capital I put, so it's a loss I can take, but it's still like is a little more than what I would have got and my system gave. So my system gave exit, but I was holding. So the system beauty is the exit rule. Okay, any system trader you ask, he or she will tell you it's the biggest blessing. And Ashok is smiling. I can just even see him from here. So the exit rule for this is basically you take the previous candle low. Okay, so exit rule for long is we take previous candle low. Okay, and if the current candle closes below previous candle low, we get out. And I will add here one comment which may remove any doubt if any one of you may have. That comment is no questions asked. When your system says you get out, you get out. When it says you get in, you get in. If you ever worked in a company or you still work, okay, and you kind of take instruction from your boss or you follow, right? Many people don't, but like some people don't, I would say, but many people will follow. Okay, boss is right. What boss says, right, right? System is boss. If system says buy, you buy. System says sell, you sell. Whatever intelligence we want to do it first. Once it is done, decided, tested, follow it like a slave. absolutely follow it, no question asked. Okay, that is the exit rule for the long. Now for short condition, it is exactly like a mirror. So I'll explain this, don't worry about the code, at least just get the condition. Short condition is exactly mirror. Okay, where current close goes close below low of previous candle. Now you have to just think of a ulta, like inverted U, that U or cup earlier was like this. Now just invert that. So it's a 3 candle formation again, where my current close has to be below low of previous candle instead of the high earlier, right? And the low of that previous candle has to be higher than the low of the candle before it, right? Like basically it's like now the middle candle, the middle stick, that cup is inverted. The stick is like vertical, standing straight, and there are the 2 cup ends. One cup is on the left side down, the other end is on the right side down. Okay, so my current right side down cup end has to be lower than the middle stick's low. Okay, and on the left side also, the basically the middle stick's low has to also be higher than the low of the cup on the left hand, right? So it's a just exactly inverted U. It's an inverted U. Okay. So this is the rule for the short. Okay, short entry. And the second rule, so it has to happen the low of the candle preceding it. That's the only thing. And the second rule remains like the 200 moving average. So basically, the current close has to be lower than the 200 simple moving average. Okay. So when both these conditions are met, the short is taken. I'll explain some on the chart also. Like if we say currently for a long trade, if this current candle's closing price, okay, which is the green here, was higher than this previous candle's high. This high is 17,674 and the current close is 647. If this 647 was higher than 74, say it was 80, 85, 90 something, then we have this, look at the condition met. This middle candle is lower than this previous candle, so it's a downswing, downtrend kind of, and then the current candle goes above this candle and closes here. It's a buy. It would have been a buy signal if this had closed above here. That would be the entry. And exit is nothing but just take previous candle low, and if the current close goes below that previous candle low, get out. If we take any short trade, any short signal, okay, short signal will be something like this. So where, let us say, yeah, take these 3 candle here, 21 December, 11 o'clock, 12 o'clock, and 1 o'clock, these 3 candle. This high is higher than this high here. So it's, or actually this low is higher than this low, not the high. We are going to check on low. The low of this candle on 12 o'clock is higher than the low of the candle at the 11 o'clock, right? It's higher. And the close of the current candle is lower than the low of this middle candle. It's an inverted U or inverted cup. So this is a bearish swing. And this price is also, this close is below the 200 period SMA. The 200 period SMA is above. So when both these condition is met, at this point here, the signal will be short. The signal will be short. Now, where will this short get out? It will take previous candle high it checks for the previous candle high and if price goes above that. So previous candle high is here right now 69.55. No. Is it going above this? No. So continue. Is it going above the high of this previous candle? No. It's down. Continue. Is this above the high of the previous candle? No. Continue. Is this close above the high of the previous candle? Yes. So at this close you get out. So this trade will be like a small loss because we have shorted here, okay, and got out here little above. It's a small loss, minor loss. That's the rule. For the exit, remember there is no moving average check or something we are doing, just exit. So there is no moving average check, we just exit as is. Okay. Now, when we actually run the rules, so I don't think there is actually going to be too much time to go through the entire code. What we will just do is run the code, obviously, and I've given comments, right? So you can kind of be able to check that out. So basically, broadly, what we are doing here is we are checking that we are going to run this in a particular date range. So we're going to start from say 2012 to 2022. This is for that, right? We're going to test it in a particular date range, and then we enter whenever the long condition is met. We take the previous candle low as stop loss. Whenever the entry comes, we take the strategy.entry long trade. For how much quantity we specify here 3 lots. On a 10 lakh capital, we are using 3 lot. And whenever the exit comes, it goes below previous candle low, we are going to close it. Right? So I just give a gist so you get an idea. And the short trade, likewise, when both those short conditions are met, we'll enter the short. Okay, and whenever it goes above the previous candle high, we get out. So here I have added 1, 2, 3 more things on this date range and all. That's why it's the length of the code is little more. But I'm using a Donchian indicator here, but not really using it. The code is there. But if we just were to, I was run the first code I was telling you that system on intraday, it was just like 15 lines or something of code. So basically you want to have entry rule for long, exit rule for long, entry rule for short, exit rule for short, and how much quantity to do. Okay, and when to do, what to do, and how much to do. These are the main things which any coding structure will have. Okay, and what we do is now we run this code. So you see how simple it is to actually run the code on a trading view. Then you just remove the indicator for now. And let's say I'm going to just add to chart. There you go, voila. Okay, this is what is the output. So this is why we call this is not the secret why we named it Blue Mountain. There is another story. I think Ashok will tell you some other time. But effectively, this blue line is nothing but the equity curve of the system, right? So this is like basically how did that 10 lakh rupees grow up and down? Did it grow first of all? And if yes, then how much did it become? So the 10 lakh has like turned into 25 lakh 50,000 in how much period? So TradingView intraday data is from 2018. If I just scroll right to the bottom, let me just scroll right to the bottom and I will talk about this trade sheet later. You see the first trade is March 2018, it is showing you. Okay. So TradingView has taken data from 2018 start till end, till 2022. Okay. So this is roughly 18, 19, 20, 4 years of, nearly 4 years of data. Okay. Nearly 4-year backtest. What are some of the key metrics that we have to see in a system when we evaluate? We have to see net profit, obviously, which is interesting. You'd be happy, I'm sure. I'm happy looking at this. It's probably one of the nicest kind of systems or curves I've seen in my Nifty trading over the period, and I've seen a few of these, quite a few of these. So this is quite interesting. This has 603 trades. So if it's 600 trades in about 4 years, it's 150 trade roughly in a year on average. Percent profitable is very interesting. So when in school, you remember, I don't know if you remember, in my school, when we used to have these exams, our passing marks used to be 35 in any subject. So effectively, one mistake many of us make, it is, I made this in my initial days a lot, is that I used to just hate to lose money or to get a wrong trade. Okay, I still overall over a period of time as a trader, when I'm doing this as a business, it's part of life up and down, but end of the period I aim to be profitable of the after running the trades. But uh, we want to kind of had to eventually accept and understand that many of these trades are not going to make money, especially more actually the trades that are losing than winning, right? If you see 45% winning means how many are losing? About we see 55% trades are going to lose money. Okay, but interestingly, the system is profitable, it's paying money. And how is that? We'll see more. One reason is, one of that factor is the profit factor. What is profit factor? Nothing but total gross profit upon gross loss. So all the profits we make divided by all the losses is profit factor. If like you think, if you're doing a business, then all the sales is the profits, all the costs are the losses. Okay, so total sales upon total costs is profit factor. You want this number to be probably above 1.1, 1.2, 1.5 is good. Like anything above 2 is like very good. So 1.63 is reasonably good, not bad. Again, we will add cost to this. I've not yet added cost. So obviously when I add cost, the return will go down because there are 600 trades. Right? I've not taken cost, but I'm just first explaining the concept. Then we'll add cost and see. After profit factor, very, very crucial, and which many of us will understand or think about if we are running system or trading, is the max drawdown. So when we trade this, what is the worst that the system has lost from its peak? Say we started and the worst phase came. Okay, like you see this blue mountain. So equity curve is just like climbing mountain, right? Mountain may we go up, down, up, down, up, down, up, down, up, down. It's like that. The money is made, money is lost, money is made, lost, made, lost, made, lost. It keeps running just like a mountain. Now, this down part that we see, this fall here, is probably one of the biggest, steepest falls among all the falls of the downturns that this mountain has had. Right? And this biggest is basically 1,39,000, around 11.5% of capital. So say we started, okay, when we start right now, we are here in the mountain. Do we know whether whether we are the right place and the mountain where we are is going to take us to the road up or down? For sure, we don't. We will only know when we start walking. So when we take 1, 2, 3, 5, 10, 100, 20, 200 steps, we will see that, are we going up or are we going down? If we are going down, then it's the down part of it. It's not probably the right path, right, to go up. But sometimes to go up, you'll have to take the down route. You'll have to go down and then climb up. So eventually, let's say we are here right now at the mountain. We can't see this period ahead. So it's at 120th or 120th trade. All this number on the x-axis is the trade number. So first trade, second trade, 10 trade, 50th trade, 100th trade. All these white lines are markers, 100, 100, 100, 100, 100 trades. So basically we are here, let's say, and we start, and this downturn comes, right? So that's what the max drawdown is, what we anticipate. And this gives us an idea of what a worst has happened in the past. Does it mean that if this is the steepest part till now in the mountain, the down mountain, there cannot be another steeper part than this? Does it mean for sure? No, it can be, right? It just may be that that other steepest part has not yet come. And again, many system traders will tell you that the max drawdown, which you have not seen in the past, is probably just wait. At some point, it's going to come. You have to be ready for it. But knowing how steep this downturn is, it gives us some idea that what to expect. I could expect that if this drop is like 100 feet, maybe in future I get 200 feet. Okay, at least I may not expect like a 500 feet. If something 500 happen, then maybe that is not the mountain for me to climb totally. Right? Something is changed, something I don't understand. So if it drops like 150, 200, 200, 150 feet or 200 feet, whatever, depending on my tolerance, I will stop climbing that mountain. See, I'm on a trek, okay, and I'm doing this. Very same way in equity system trading. Estimate that we're at the worst point when we start. Okay? And keep enough, we have to, when we calculate our capital, we have to treat it that way, thinking that this may happen. Okay, now that we have got this number also, finally number one number is average trade. That is on average per trade. This has made 2,500 rupees per trade on average. We were talking in the start, Ashok was mentioning about some strategies where he's running some things. The average trade is say 1,000, 1,200 expectation per system per trade. Again, different system may have different frequency, right? So if like this has 600 trade with 2,500 average, if in the system Ashok was talking about, there are like 1,200 trade, 1,400 trade, and it's making like 1,200 rupee average per trade, it's kind of going to be the same thing, right? So you basically get a profit of total of number of trades into the average. And now finally, number of bars in trade average 7 means this trade lasts for 7 hours. So it's an hourly system. On average, the trade lasts for 7 hours. Okay. This is done, gives you idea of the curve. And if you see the more detailed performance summary, this is more detailed analytics. I'm not going to get too much into all of it, obviously due to lack of time, but whatever key things I think, I mean, if this whole thing we go, it's a whole kind of course which will kind of take at least like 6 hours at minimum at the basic level to get an idea, and like a little more detail is at least like a 2-day kind of broad introduction, right? But I'm just trying to cover the key aspects in the couple of hours we are together. So percent profitable, you already know. Profit factor, you know, which you saw, this total gross profit and gross loss. Another interesting part you should know is ratio of average win to average loss. So this ratio being 1.96 here in all the trades means when we win on average, we win 1.96, that is 2 rupee around, and when we lose, we are losing about 1 rupee. So it's like 2:1. Like, you know, I always give the example of fun fair. If you play 7 up, 7 down game in a fun fair, I don't know that stalls are there where, you know, there are 3 slots, below 7, above 7, and lucky 7. And the dealer or the stall owner has a glass in which there are 2 dice with 6, 1 to 6, 1 to 6. And the dealer can roll that and just throw. Before that, he'll ask you whether he or she'll ask you whether you want to bet on a below 7 or above 7. And for each of that, there is a payoff. So if it's below 7 or above 7, if you bet like 100 rupee, you get back 100 rupee on your capital. So you get totally 200, out of which 100 is your capital. But if you bet on lucky 7, the number 7 itself, the middle number, you get 3:1. The stall owner says, okay, you take 3 times. So like of your capital, so you will take 200 rupee net profit. So the payoff there is like 2:1. On 100 rupee, you get 200 rupee. In the 7 up or 7 down, the payoff is 1:1. On 100 rupee, you get 100 rupee. Similarly, here, the average win to average loss is nothing but the payoff, right? Of winner to loser. So if you say this 1.96, roughly around 2, when you win like about twice as what you lose when you lose on average. Okay. So this is the reason why. One is obviously the profit factor being positive means the system had positive. Other reason why the system is positive, because when we win 2 times of what we lose, right? We are winning twice of what we lose. So even if we are wrong more than 50% of the time, net the money that we can expect to make is much more than what we are losing, and we can expect to be positive. Okay. This is the core mool of any system kind of trading, business, venture capital, angel investing. that rises on this. I think many things in life, including like venture or angel, where they make 10 bets, out of which they know like the rate of failure may be like 8 bets probably, right? 7, 8 bet. But is that 1 or 2 bet which will be very big, which will pay off. And so maybe the other one to just make little money, right? So maybe they have out of 10, 3, 4 are positive. Similarly, say 30% winning ratio or 40%, depending on how good a venture capitalist you are. But is that 1 or 2 big trades which is going to make the return? Okay. So which is that trade? Well, I wish I knew. Nobody knows. So if you want to see all the trade, now similarly, like how you saw all these stats for long side, there are various statistics you can see on the short side, right? And interestingly, the beauty about Blue Mountain, I think, is that it makes reasonably good sort of payoff ratio on the short side as well, because there are not many systems I think I found which kind of do well on short side. So obviously, you may want to study further, test it out, and see if this works for you. But like I find it very, very interesting that the short side win loss is also like above 2, and there is a return of about 6 lakh rupee on the short side, which is also fairly interesting. Obviously, the more money will be made on long side because mostly market has been like more bullish than bearish. So like you cannot, I mean, you cannot have the long not making more money mostly. But even having profit factor of 1.6 and like a payoff ratio of over 2, actually the payoff ratio, so payoff is same as win to loss ratio. Okay, another word is payoff ratio. Friends, is the same kind of, name, and interestingly, the win-loss ratio, payoff ratio in short is 2.1. It's like more than 2, okay, which is actually more than the long side 1.9. So which is also very, very interesting. Some other stats you see, like largest winning trade data is also interesting. Like short side, largest trade has been made 11%, whereas largest loss lost 3%. But in long side, the largest win was 5% and loss was 1.5%. Obviously, it shows the short side volatility generally being more. And I suspect this is because of the COVID period. So because this system covers 2020 bear market also, crash, whatever we call it, some people call it flash crash, not really bear market. It just fell for like 2 months, 2.5 months, but not even 2, it was like 8, 9 weeks actually, and but very, very sharp and very fast fall, and then recovered. So that's why probably the volatility is a little higher in the short side. And I think these stats are very interesting. So finally, you may then want to see like the trades, the list of trades. So this has all entry long, entry short. It gives every signal. You can just take one as a sample, like trade number 599. Long trade came on 14 January 2022, which is quite recent. Sankranti Day, actually, the kite flying day, at 1 o'clock on the price of 18,231. It was a buy trade, which got out on 18 January after like 3-4 days at 18,237.95. So just hardly like $6 profit points wise. So 6 into lot sizes, 3 lots. 3 lots give 150 share because 50 is 1 lot. 115 around into around 6, little over 6 is like around 1,000 rupees. So this is the profit that you see here. This is how it is computed. Okay. And likewise, every single trade, that what time it came, what price it came is there. So this trade list is not a free feature. This comes when you pay, and then this is downloadable. Actually, sorry, the trade list is a part of the free feature also, but it can't be downloaded. You can only download if you pay. But still, you can at least see it and analyze it. Before we decide to maybe want to go pro or use it, we can just see if the free stuff, whatever they're allowing us, is making sense. Obviously, we have to invest our time. So in that sense, time is the investment we all make. But then if it looks worthwhile, only then you kind of may want to, and you want to go professional, one may go for paid. Otherwise, keep using the free services also. There are lots of free features. Again, this is also not any recommendation for trading view, like you can wholeheartedly use any system you want, any tool you're comfortable with. I've over the years used various tools like NinjaTrader, Amy Broker, Python, coded across some of these languages, and I find to start, I mean, this Pine script is very good. And then if I want to build the idea further, I may like kind of use a Python or some other more detailed software. Okay, so this is basically the system. It's it's performance. This was on Nifty. Yeah, let me add very quickly, like now the costs, and I'm sure you will have some questions and stuff, and we can take that later. Till then, just be with me, just see till we finish this, and then I'll be happy to take any question. So if we go into the properties of the system, you see commission and slippage is there. So what I'm just going to do is a brokerage nowadays, luckily with brokers like My Expresso, and you're seeing, and you get like great plans. Losing trade sort of, I think you don't pay if it's, I'm not sure if that's intraday or even positional, but like if there's a losing trade, you kind of don't pay. So in a way, brokerage is not more like a very big factor in this. It matters, but like not that big, right? So slippage is a very important factor. Slippage eats in, obviously brokerage will hit if you're doing too many trades. Yes, it's a matter, then you may want to negotiate, and but like with this kind of system, it's okay. Low to mid, if you're doing very high like scalping and that kind of things, then that also matters more, starts mattering a lot more. So what we'll do in slippage and ticks, we'll put like say 20 ticks. So like actually 10 ticks, let's say. So every tick is like 0.05. It's one increment of one price move. So I just put like 10 ticks. This is definitely going to drop. So 155 has become 146 percent, and the drawdown has increased from about close to 11 to 12, little over 12. Okay, that's the impact like after cost. If you want to be more sort of conservative, you can take even say 20 ticks. 20 tick is nothing but 1 rupee, right, of slippage within Nifty is fairly reasonable. So return have dropped to 137 and drawdown 13. 137% totally in 4 years. So if you divide by 4, we get roughly 32-33% in a year. The drawdown of about 30-odd%, right? You see profit factor has dropped after adding cost. It was 1.6 something, it has dropped to 1.5. So as and when obviously costs come in, the equation will change, but it gives us idea that how sensitive is our system to cost. So it's like if the return drops too much or the drawdown increases too much, then you want to know that your system is more sensitive, and you may want to kind of do some more negotiation, or like look for cheaper brokers and things like that. Okay, so that's kind of Nifty. Let's quickly look at Banknifty also. Let's just do Banknifty. Okay, obviously it's absolutely more stunning, beautiful. Like, so the returns are nearly double of Nifty, with the drawdown being almost the same, isn't it? You notice in Nifty the average return per trade was 0.20 to 0.3 something. This is nearly double, and the average per trade is about 4,000 rupee now, close to 4,000 on Banknifty. So this big spike in equity curve we see here, this big spike is the profit, like the profit suddenly shot up from like about 16.5 odd lakh to like 23 lakh or something. Big spike. What is it? You may have already guessed. It's nothing but the flash crash of COVID-20, if I may call it. So at that time, system was short, would have been short because it's made money. This kind of money would have been made on short side. And that's another very beauty of this alternative trading systems and trading strategy, right? So it allows us to basically probably make money when our core portfolio mutual fund PMS maybe this time any fund manager worth his or her salt would be losing, right? I mean, if index is down 40%, like your manager who is the best, the ACES to ACES, ACE means the best equity manager, will be probably down 20-25% in that. Like, okay, I mean, I'm just saying there may be somebody, but I don't know. But you will lose money, boss. Market is tanking, falling. We are going to lose money. However, it's a system like that which can hedge, protect, and give cushion to our PMS mutual funds and stuff in this long only. Right? That's the another, not another, I would say, but key objective from an investor standpoint who's say already exposed to equity, mutual fund, PMS. Understand one thing, they are all sailing in same boat. When the tide turns, if market falls, crashes and corrects deeply, we don't know, it may happen once in a while, may not happen for 2 years, and then suddenly it happens, it drops as much as what it was here. Anything can happen, right? Or it could just start dropping from tomorrow and go down. No one knows for sure. So as a investor trader, you may want to think like that, you know, stall owner or the casino owner who may want to keep the odds or the edge in his or her favor and try to win most of the time. So you have your equity mutual fund PMS, which will make money when market goes up. A trading system like this will also make more money. You will not, may make actually mostly, let me correct, in winning phase. As you see, this has made money in bullish phase also. After COVID crash, market has been going up, and this has made money there also. It's tended to work in both bullish and bearish market. Okay, so you may want to diversify with a portion of your investments and stuff like that from core equity PF mutual fund or direct equity they're doing, because they are, end of the day, if something happens in market, whenever that happens, these all will mostly lose money simultaneously. Okay, if something like there's a large trend, I hope that's something I'm sure you'll agree and appreciate and understand. So this was the system. This is the rules. I'd be happy to take any kind of Q&A later, and we'll just switch back into the PPT. So I've already spoken about lightweight benefit, it being web-based. You can like code wherever you go, and you have all this data. Like you just saw how we swifted from Nifty to Banknifty. Like we could just test the same on SPY, on a US market, on a stock here, on anywhere like a Forex, crypto, whatever data is there in the same system, we could switch and analyze. All right, so over to you, Ashok. Now. Or I think it's the.
Thank you, sir.
Yeah.
Yes, thank you very much. Hi, Sachin, are you there, my friend?
Hello, I'm audible?
Yes, Sachin. Go ahead, Sachin.
Yes. So, hello traders. This is Sachin Zawade from Espresso product team. Espresso is basically a discount broking company under Sharekhan group of companies. We offer pay when you profit model, specially designed for intraday traders. And you can check details on our website, which is myespresso.com. It is a very unique offer where you have to pay for trades which are profitable. On a losing trade, we will not charge you. So we have a presence across all the channels, such as like a website, then mobile, and then Binge. Binge is basically a desktop application. I definitely would like to request you go and check our website and as well as mobile also. And I'm going to talk about a Binge, which is a Windows based application. So it is a specially designed for traders as well as for the investors also, and we like to provide here a best in class experience with the real time data feed, with the more advanced charts, advanced tools, and we also have a multiple market scans, and there are other tools and other features are also there. And we have created demo watch list for every feature, which is a available on our YouTube channel, which is Espresso Invest. Next slide, please.
Vivek, can you please jump to the next slide? Hi, Vivek. Did he rush to pick a glass of water?
Yeah. So,
Okay, you continue.
yeah. So we have started our business uh, last in the year of 2019 September, and we have completed 1 year. And we have a very good sense where definitely we want to listen our end users. So on an ongoing basis, definitely we want more and more suggestions from our traders who are actually users of our platforms. So definitely whenever you have any suggestion, we are welcome, and definitely we will help you out. As a team, we have a very well experienced industry experts as a CEO, and as a technology lead, and then our product head. So we all are, as a passion, we all are traders, and definitely we want to bridge the gap where traders find difficulties with
Yep.
the help of technology. So we
Vivek, can you
always
jump to
look
the
for.
next slide? Are you there, Vivek?
Yeah, I'm here.
Vivek ji? Yeah, please jump to next slide and kindly wait for the request.
Yes.
Yeah, next jump. One more slide.
One more job.
Yes, please. Yeah,
Yes, one more
one
jump,
more.
please. So I was talking about this binge application, which is specially designed for pro traders. And yeah, so these are a few tools which I want to highlight, such as like option chain. And nowadays, option traders are increasing, and where we want to help you out as a technology. So we have created advanced option shell, which is a very simple but yet powerful. And we have created a lot of touch points where within a few clicks we want you to place the trades, because options are so much volatile. We also have innovative features such as like where you can predefine your all the orders, such as like a buy order where you can define your quantity. Then we have a you can define your product type, you can define your stop loss before opening the order window. So definitely we always want to focus on more on innovation and how we can simplify the life of traders. Next slide, please.
This is beautiful, yeah. Just a minute.
Yes, Vivek. Definitely, I request you. Why don't you go and check our binge application? So
We'll
yeah,
do
these
that.
these are
We'll
the
do
few tools. Yes, yes, please. So these are the few tools. Definitely, it will help you out as a trader in a day-to-day life. We calculate margin, we calculate the payoff. Yeah, so we have a dedicated tools for it, which is very beautifully designed, and we have a dynamic alert. So in this alert, you can create a alert for a real with the real-time feed. Uh, in this, you can create alert basis on price action, then volume action, and we also have a section where you can write your condition. So approx, you can create around 18,000 conditions with the multiple parameters. Next slide, please.
So I have a small question. So if I give a condition and that triggers, it will actually trigger a alert, and then I can read on that.
Yes, yes. So it is with the real time, okay? And whenever exchange pass the feed and alert get triggered, we have a result window where you will get notified.
Okay, fantastic.
Yes. So these are a few upcoming which I want to highlight, such as like a strategy order. Now our traders are going very in a disciplined manner. So we are also helping with them to create a strategy where you will do analysis, and basis on your analysis and advanced touch point, you will take a action. So yes, as a broker, we want to support you. Then we are working on option profiling. There are some unique features which are very advanced, and we want to give a new thought to our option traders. We are working on it. And yes, there are many advanced touch points which will definitely going to help you out to make more profitable trades. So this is we are Espresso. Thank you. Over to you, Ashok.
Thank you very much, Sachin. Next slide, please. Okay, friends, here is an update on status on the Amazon Fund of Trading Strategies, an organization which is mainly focused on building 100% automated algo strategies for retail traders. The salient features include 100% transparency in risk and return, zero manual intervention, absolute plug and play model, and the overall service is like a strategy as a service. All right, for more details, log into www.statuson.in. The relationship manager will get in touch with you. Thank you very much. Sir, next slide. So friends, do not forget to grab this Panini positional premium peel strategy from the Traders Gurukul website. This is a session which was done in the Option Omega conference early last year, and I think that is a free product for all of you. Just go to the tradersgurukul.com website, search for the keyword Panini, and you will get that course for free. You just have to add it to your subscription. It will be available in your dashboard for long-term access. Thank you. Over to you, Vivek ji.
Thank you so much, Sachin and Ashok. Wonderful. And Ashok, this looks very interesting on Stratazon. So it's beautiful. And I think the best part I liked about all the points is your transparency on return and risk. I think it's so important and so interesting to reveal that and then let customer choose what he or she wants.
And the best part is when it is not making money, you know.
Yeah,
Anyway.
I wish Ashok, sometimes some people ask, they say, I want to make only 10% a month. There are people requests like that. And I'm like, sir, do you have a strategy like that? And they're like, so what do you mean it's not possible? I said, I don't know, but if you have one, please let me know,
See, the problem is people come with an extensively leveraged expectation. That is the biggest problem for the failure in stock market, because most 99% of people who come into stock market come with an expectation that boss, here is something where there is easy money. That is the whole point. People always take trading as an alternative. For simple example, I can give: my boss hates me, I didn't get promotion, my salary is not enough, okay, I have bigger ambitions. These are the reasons for somebody to enter into stock market. And the best part is they would not put even 10% effort. That is the biggest problem. See, if I just had one of my well-known friend trying to take a CFA level 1 exam. He slogged so many months in order to take that exam. That is the whole point. So that is a problem. But people think it's all very easy. Definitely not. Trading, I would say, probably, don't you think, Vivek, that speculation is maybe the toughest profession in the world?
I think, Ashok, you call it the toughest way to make easy money, right?
Yeah. And I
There
always
is
tell people, the reason why it is very tough is that because the person whom you're going to fight is that man has a hell lot of money. He has billions of dollars with him. He has extensive technological support. He has huge resources from the IITs, the Harvard, the Stanford, the Cambridge. Okay. He can take how much ever risk he wants. He can always run without profit for years. Correct. Even today, Amazon has not made money in India, and still why they are sustaining? Because they can afford it. So we are the chai walas, we are the pan shop walas. We can't sustain 3 months without profit, which we are already experiencing. So in that scenario, definitely we need to have our own process, and we being the Lilliputs have to take the relevant approach. Of course, ultimately the right approach is a process oriented approach, which you presented today.
Absolutely. And Ashok, interesting, if I just go back into that trading view, And just for once, before we move into any question, let me just for quickly show the impact of leverage.
Please do. That's most critical actually.
I'm just searching for that screen again. While I hunt that, you may want to start with 1 or 2 questions. Actually,
No worries.
uh,
Okay, friends, over to you all. Please shoot your questions. Let us pick it up one by one.
Ashok, I found it. Okay, so give me a second. Let me run this. Yeah, and then we'll go on to the audience. So look at this. Let's see the leverage factor here. Okay, you see in the quantity I gave 3 lot here. Okay, we gave 3 lot. Let us say we make this to 5 lots or 6 lots. Okay, we just double. We just doubled it. Same capital, 6 lot is allowed. Ashok, we can do that, right? Because exchange charges 1 lakh per lot in future. So with 10 lakh capital, I can trade 1.2 lakh, 1.3 lakh. Something.
Yeah, 1.5. Take it as 1.5. That is best.
1.5, 6, I can do 9 lakh. Tak. Chalo, 5 lot I can very easily do. Let me put it 5 lot.
Easily.
Okay, 5 lot, let's say. So let's make it 5. Okay. We'll save this. And let's add this again. So look at the return. It's 40 lakh now on the 10 lakh. But look at this max drawdown. It's a 4,71,000. Now this 14%, why it is saying from peak, wherever this drawdown came, at that point, maybe the money had run up to 20 lakh, 25 lakh or 30 lakh. On that 4,71,000 is 14%. But imagine this 4,71,000 loss comes right in the start. Like how we said, we don't know where we are on the mountain. How much will be that as percent of our 10 lakh? We lose 47%. And just imagine, like we said, if the drawdown doubles, right? Where in future it becomes more steeper than past and goes 2 times. This is 95. We lose our full capital, will blow up. So this just, I just thought came to me to show it. Hopefully this helps to give the picture that leverage is in our hand, but that is the double-edged sword, basically. I'm going to make it back to 3, Ashok, because my aspirations are not that big. So I want to stay long. So I just make it back to 3 lot. Okay.
I think in models like this, dynamic position sizing would be a greater model where whenever you make money, you can raise the lot size. Whenever you lose money, you can bring down the lot size. That would be a much superior approach.
Yeah, absolutely. Absolutely. We can like leave this as an open canvas, and then these are the addition. And like you said, that is the big value add kind of thing and the edge, because the rules are okay, like in some sense, right? But edge comes in risk management, position sizing, betting strategy. So yeah, absolutely. Okay, if there are any questions, Ashok, we can take.
There will be a lot of questions. Let's pick up one by one.
Okay.
You can go to the Q&A panel.
Yeah.
All right. The first question is from Sri Nair. He's asking, sir, can you please share the setup once again? Can you elaborate the session?
I knew that will come.
And
so,
the query includes Deepak Makija. He says, talk in layman terms.
Okay. Layman
without
term,
the code.
Without the code. Let's go to candle again. So candle chart like this. Let me close this. Okay. So first setup for bullish trade is, first we're going to look at, let's just look at long entry and long exit. Forget the short for now. Okay, we'll just learn long entry, long exit. Short will come automatically. Just forget that for now. Let's look at long. So long entry setup is like this. I have 3 candle. Okay, I need a current candle, previous candle, and candle before that. At least these 3 candles. First is my current candle close should be higher than the previous candle high. So current candle close in Banknifty is 37,740. The previous candle high is 37,720. 740 is greater than 720. So first condition check. Think of like a signal and you're ticking one by one light. Okay. First condition check. Second condition in this main condition is that this candle here, the previous candle, which is the red candle, its high has to be lower than the high of the before candle. So this high is 37,720. The high of the candle before that is 37,800. So 720 is lesser than 800, right? So this condition also met. There's a downtrend. After downtrend, we got an uptrend. Okay. Now this 3-bar formation is basically a swing. It's an upswing. This is what Mark Riverland has shown. And interestingly, actually, thanks for pointing out, Ashok, and Deepak, and raising it again. Riverland is actually referred in his methods to WD GAN. Okay, and GAN, out of all the various methods used, obviously one of the way he defined swing is like this. So Riverland took that somewhere and he has tweaked it a little. Okay. Where basically this 3-bar pattern like this is like an upswing. Is this clear? I'll repeat it if you want. I mean, like 10 times if you want, honestly. But like, is this first part clear?
Yes.
Okay, great. Now, but with this, will I take a long? No. Why? Because I may get too many trade or too many whipsaws. Whipsaw in our trading system is false trade, like trade will loses money. Not false, but like, I mean, that's going to be part of life now. Let's call it in a good way. It's a cost. When we are doing the business, there's a cost and then there's a sale. So that trade is a cost and I want to reduce cost as a businessman. So I add now my second indicator. Simple, beautiful, lovely moving average. So simple moving average. Okay. Oops, sorry. These are a whole bunch of moving averages. So let me go to just taking the technicals, moving average, and I just use a moving average. You see the blue line by default 9 has come. I'll just make it like 200. Okay, 200. Simple moving average, 200 candle. Now, can someone tell me, is this daily moving average or no? It's not a daily moving average. Many people of us mistake it. It's not daily. It is now hourly because I'm on an hourly chart. So this is nothing but the simple moving average of last 200 hours. So it is the closing prices of last 200 hours all taken together, divide by 200. It gives this value. Okay. This rule now is that this closing price, current close, has to be above this 200 moving average. Like how, you know, in investing and all, 200 moving average line is used, no? 200 average, if it's above, then it's bullish, below 200 average bearish. Same concept we are using in our trading. Price has to be above the 200 SMA of hourly. Is this rule clear as well? As a standalone rule, and I can repeat. This is a simpler rule actually. Only rule is price has to be about 200 SMA. Forget the first rule now, that 3 candle U shape. Just forget it. For now, just focus on this. Current close should be greater than 200 period SMA. Is that rule clear?
Yeah.
Fantastic. Now, club both the rule. The first rule I said and this rule. First rule is U shape, which we know now. I'll just name it U shape for simplicity, referencing it. Upswing, water swing, you call it your swing, my swing, Nifty banker swing, whatever you want. Okay, it's basically a U shape right now. According to U shape and SMA close about 200. When both these happen at the same time, it's a buy signal. Is that clear? Fantastic. And what is my exit rule for this long trade? Now entry is done. Now forget entry, just focus on exit and listen to this. Check the previous candle and the low of that. So previous candle low is 37,284 here. If my current candle, whichever candle closes below the current candle, whichever comes now, closes below this previous candle low, it's an exit. I'm get out of this trade. I will get out. Is this rule clear?
Yes.
Let me repeat. I'll just repeat. The candle which goes below previous candle low and closes below that is an exit for long. Right now, my previous candle low is 37,284. If in the immediately next candle, that is on Monday morning, first hour, the candle closes below 37,284.75, it's exit, no question asked. Okay, that's the long exit rule. Done. Is the setup clear, friends? Deepak and everyone?
Yeah,
Is it too simple, Ashok?
it's simple for me.
Do you think it may make money? Simple things make money.
Always simple things make money, provided people religiously follow that simple things, which is very complex.
That's many people, many of us, I'll tell you a story. I met this trader in 2012, 13. It was very early day for me. Still learning, but that day was very naive. He said, he gave me a fractal pattern, 5 candle. Fractal is like how I did it, 3 candle, it is 5 candle. Means the high, 2 higher high, and middle candle is highest, and then 2 lower, low. You know that, right? And he
Yeah.
said, the fractal happens and the high is broken, buy, and if the low is broken, sell. I said, a friend also, I said, what are you saying? How will this make money? He said, you just do it or whatever. I made it. After 7-8 months, 6-7 months, I met him. He's like, you know how much money that system has made? I said, I'd forgotten also. He said, I'm up 70% in this year. Obviously, leverage was a little higher those days we used to run, but still it made good money. That's where my eyes dawned, like simple things make money. We tend to ignore them most of the time. And like you said, then sticking to it, when you get 2 losing trade, 3 losing trade, 4 losing trade, if you think that this is the system not good, I abandon it. It's like that queue, you're standing in the railway near the ticket buying a queue or a bus stand, and the queue is long and the next queue appears shorter. Okay, this queue is okay, but the other queue appears shorter. You leave this queue and go to the other queue. Guess what? Most of the time, that other queue becomes longer, right? And if current queue becomes shorter, it's just like that. So system hopping is a big challenge, which many of us face. Okay.
Okay, so the next interesting question is from Arnish. He's asking, sir, can I set an alert for the strategy in TradingView?
I think you should be able to.
Okay, and can you please send the pin code? I will share it to the audience through our Telegram channel.
My pleasure. My pleasure.
Okay, here is an interesting question by Vargaonkar. He says, what if it crosses and doesn't close below previous candle low?
Don't do anything. So if it crosses during the candle, the hourly candle, and pulls back and comes above the low, right? Is that the question?
Yeah.
Yes, good question. So in trading these, we can do 2 ways. One is check the rule only at close of candle, or check it in middle of candle also. Sorry. Now the way I've in the current context of the way I've defined the rule, if I'm going to check at close of candle, then every time I should check at close of candle. However, some traders find that sometimes it can become too much, and even I finding sometimes this candle of 1 hour close can become too much. Then what I may want to do is I may want to execute the same system actually in a options maybe instead of future. So instead of buying a future, I may buy a ATM call. And then what happened, even if it closes below a lot, right? In that 1 hour, it falls a lot. Like what happened 2-3 days back, Banknifty in 1 hour fell 700-800 points. When I'm long put, how much can I lose maximum? Premium, correct? Even if Banknifty fell 900 point and I have bought that option for say 450 rupee, it may probably go to like 300, sorry, it may go to like 50 rupee, 80 rupee. I may lose 300, 350, I'll still have little value, salvage value I'll get. However, I know max what I can lose when I own a put or a call. So I tend to check this at the close of the candle. That's how I tend to do it at this point. But again, I'm testing again, Ashok, like saying, we keep talking to client when drawdown come in my system right now, it's going on. So I was having discussion with client 2 days back and he's asking the same question, why you don't do? I said, so earlier I tried, it didn't work so well for me, but we'll test it again. So if you get out in middle of the candle, what is the trade-off? The trade-off is that your number of signals and trades will increase, right? Because many time it will go in below and then come back up, go in, come back. So you get a signal. Each time there is a signal, the trades will increase and the performance may change, whether it's for the good or bad is something you want to see, and whether if finally you are comfortable that way, but if your system is overall still positive and profitable, you can expect to make money, then please trade in the middle of the candle way. But I don't trade that way at this point, but I'm exploring. Does that answer your question? I hope it answers.
Yep, sounds good. Okay, here is one interesting question. I know this is little too much of an expectation, but at least let me see how you would try to console him. Vivek, you had shown a drawdown of 14% in one of your examples. Can you throw some light on how do I reduce it and bring it to a reasonable level? Ideally for me, 14% is an excellent max drawdown, but he wants to reduce it further. What is your answer, Vivek?
So I can reduce it to 0 for you.
By not trading?
Yeah, actually, you got it.
That's
There is
too
no other way. Okay, there is no other way, friend. I believe you me. I mean, I wish there was. Can you? Okay, let me ask you. Actually, can you tell me one business where there is sales without costs?
Ah, very good one.
That is one. Okay, I don't know of profitable business. Okay, even if you invest your time, that time as a cost. Okay. Second way. Okay, now coming to something in one way. Dealing now with the fact that we have no other way but to trade, right, and do the business. If you want to reduce that 14 to say 7, you can reduce your leverage by half of what we have done. So currently we're taking 3.3x leverage, right? Because we are trading in 10 lakh rupee, we are trading 3 lot. 1 lot of index is about 10 lakh. So 3 lot is 30 lakh. So if in 10 lakh rupee, I can't trade 1.5 lot, but what if I increase my capital to 20 lakh and trade the same 3 lot? Then I have reduced my leverage, I have reduced my risk. I'll just show quickly. Okay, quickly I'll just show. So the same thing, right? We are just going to make this initial capital as 20 lakh. Okay. Let's just remove this whole thing and like again save it. Add to chart. Voila, there you go, my friend. Reduced to 8%. But what happened to return? That also, which was much higher, has come down. If this is acceptable to you, please go with it. It's a very good question, actually. Ashok, I know one prop trader. I met, he's a friend, client also in Noida. I asked him, he runs portfolio strategy, right? So the other way then is you keep adding more strategy. Like instead of one, and again, obviously you need more capital for that.
Correct.
So you add like another strategy which can complement this, like cricket team, right? Along with
Correct.
Kohli, you have a save. But let's say we this guy has that access, that prop trader, right? I asked him, what is your expectation of return in the year? You know, Ashok, what he told me, 12% to 18%.
Wow.
I said, okay. He said, Vivek, I don't, if I trade notionally worth 50 crore, and he may be trading that size, he's a old timer and very experienced. I have 50 crore rupee in my bank account.
Mm-hmm.
Doesn't leave, he's always smiling. Never seen him in stress, never. He doesn't
No,
lever.
but the point is he has 50 crores
He has
capital.
50
So
crore.
1% for him is
I
50
know.
lakhs per month. So
Correct.
our people have 1 lakh, 2 lakh in account. So definitely
They're
1% is
all,
not exciting.
they're all correct. So we have to lever. Okay.
Correct.
He must have shown
Correct.
he has built money by taking more leverage early days. But
True.
once you're built, you can. But initially, risk to lena. Spider-Man has to
Yes.
also take that risk, boss.
Correct.
This you
Correct.
have.
Absolutely.
Okay. I hope that answers somewhat.
Yeah. Sounds good. Sir, can you slightly elaborate on the okay, there's one question by Tejas, how to join the money control group. From tomorrow, we will also publish the method to jump into the money control, Telegram group. And that's where we are going to publish all the relevant user files, friends. Don't worry about that. I will take care. I will take care of those things. All right. Yeah. Next question is Mahendra. He says, Ashok, will SEBI have an objection if I follow the script and automate it using API bridge? No. Absolutely no. Correct, sir? Vivek, sir? I answered in behalf of you.
I am not SEBI, but what we are proposing is, look, as an individual, if Mahesh wants to run this in his own account, please allow, because as long as his risk management is already being checked, approved by the broker.
Correct.
We don't know, fine, they're taking opinion feedback from a lot of people and coming to hopefully they'll come out with some announcements, but as of now, again, there is nothing which it denies from doing algo. They are probably saying you may want to take approval, you may want to, they'll put up a framework at this point. I don't know if any of my people whom I automate systems for, or who are looking to build there and trade, they've stopped or anything. They're all continuing. That's all I can say. But I am not the regulator, so I can't speak on their behalf.
Sounds good. Okay. Sir, what is the profit target in this strategy in terms of in terms of points or percentage? By Sumedh Saxena.
Percentage, as we saw, if you see for the 3x that we were running at, let's make it back to the 10 lakh. Okay. And let's save it and add it to chart. So what are we looking at here, right? This is, say, the Banknifty. And okay, answering, so just before that, there are other question about how we can tend to reduce. Possibly, if you're trading with a 15 lakh capital, you can trade both the Nifty and Banknifty 3 lot. Or if you're even trading with a 10 lakh capital, you can do, like, say, try 2 lot Nifty, 2 lot Banknifty or something, or 1 lot for sure. But 2 lot also, or you can do 2 lot Nifty, 1 lot Banknifty. So Banknifty is a little more volatile. But create a combo of Nifty and Banknifty together where drawdown of both of them may not come together, right? So to get the combined drawdown curve, obviously you have to do little 2-3 more steps. You have to take this whole trades, take the pro, download it in Excel, and create a combined equity curve. That will, obviously, you may either read about it or take some profit, but it will work. My visual sense experience with various systems says I may tend to use both Nifty and Banknifty combo rather than trade only Nifty or only Banknifty. Okay. Now coming to the answer of this expected return, let's see, this has about, in 4 years, 240 odd percent. Let's add the costs. So let's make the slippage as, say, 20 ticks. So let's say 230, also divide by 4. Okay, 115 and 60. This is tending to kind of have a 55 odd % annual return with a drawdown of about 13%. 13 is here on the peak, but if you sit up on the base capital, 2,85,000 is a 28% drawdown, right? 28% drawdown, 55% return. 2 is to, yeah, another great way to look at it is reward to risk ratio, return to drawdown ratio. So like if it is 2 is to 1, that's fairly healthy. I mean, 1.5 is to 1 is also okay, but 2.5 is to 1 is good. Quite good, I would say. 1.5 is to 1 is good too, and 2 is to 1 is quite good. So with that ratio return, that's the kind of expectation, right? And per trade, it can tend to make on average 0.4% of the capital. I hope that answers the question.
Sounds good.
Okay.
Okay, so is it only for Nifty and Bank Nifty that this concept applies, or can I also apply it for stocks by Amit Kumar?
Amit ji, I have tried on little bit only. I tried on stocks, but works little. Some stocks, but doesn't work. So, you know, this is a big mistake I used to make a lot earlier, but I've stopped more of it now. And why? I'll tell you. I think end of the day, the index is a different characteristic than stocks. Index is a basket of stocks and more dynamically traded, more actively traded. And I think over a period of time, I've seen that even earlier days when I was running that system, which I was telling on the stock wala, the one on 3-minute candle and all intraday with the CMT friend, I was running the same one index also. But index I used to run in 15 minutes. It was reasonably okay. It never made as much money as stocks, and eventually I paused it. And it was not great reward risk also. And then finally I learned and talked to a lot of traders, experienced traders, many more experienced traders than me. I mean, I'm still just learning and getting to know this field more. And they generally suggested to run different system for Nifty, Bank Nifty. In fact, one very good trader said to me that Vivek, why don't we should use separate rules for short side and long side, because the market is not same in bullish and bearish. Like rising markets, kind of it goes little up slow, bearish market falls very fast. And I think in some 1 or 2 places, those rules have helped. So I would say this tends to work on Nifty, Bank Nifty. And you may want to test for stocks and see few stocks if it works, but like I didn't explore very deep then for stocks. I use another system there, reasonably good, and I'm building something which I'm trying to build with stocks mindset, and believe me, that tends to work more better on baskets of stocks, but it may not work very well on index. That's my general observation and experience.
Great, sounds good. Okay, for all the generic question with respect to where to find the code, friends, I'm going to publish that maybe tomorrow or day after tomorrow. Let me announce the Telegram group details tomorrow in the presentation itself, so that you can join the group. There we can share all the relevant information and all the related stuffs that I need to share. I also have to share the AFL code of the second session by Kushal Jain, that is also pending, so don't worry about that. With this, probably we can move to the end of the session. Vivek ji, shall we move on to the last slide?
Yes.
So that's a comprehensive session. We thought the session would be for a short time, but yes, we managed to pull out and it got longer because of so many queries that came in. So with this, we successfully come to the end of the 5th session of the Nifty Banker 2.0 program. So dear Vivek, thanks for the insight on behalf of all the participants of Nifty Banker 2.0, the Moneycontrol Pro team, the Espresso team, and all the family members of Traders Gurukul. We extend our sincere thanks for joining our program and sharing your invaluable knowledge with every one of us. Thank you very much, sir.
Thank you so much, Ashok ji. Moneycontrol Pro, Espresso, and especially all the participants for patient listening. If I was little tough in the way I kind of try to say, please only treat it as something we are sharing it. We believe we want to give you the truth, and I hope I help you in that journey. And Ashok, fantastic as always. I mean, this is a huge canvas for people to, I think, interact with traders and us to interact with them. So, I mean, you are doing such a fantastic service, I would say. So, and I'm so happy and proud to be. And thanks once again for giving me the opportunity. Genuinely, thank you for
Thank you
having
so
me.
much for your kind words. This adds up to our responsibility to deliver better sessions in the days to come. So, friends, that's the story for today. I hope every one of you enjoyed the show. I will see you all tomorrow night, 8 p.m. sharp, with yet another interesting session from another interesting speaker. Until then, signing off, Ashok Devanampriya from Traders Gurukul. Good night. Have a great Sunday. Bye bye.